Waves, buying and selling waves. Every upward or downward swing in the market consists of numerous buying and selling waves. They have a certain duration. They run just so long as they can attract a following. When this following is exhausted for the time being, that wave comes to an end and contrary wave sets in. The latter may attract more of a following than the former. By studying the relationship between these upward and downward waves, their duration, the speed, and the extent, and comparing them with each other, we are able to judge the relative strength of the bulls and the bears as the price movement progresses. All stock market movements, however large or small, are made up of buying and selling waves. The market does not rise and fall like the water in a tank, which is filled or emptied. It moves to a higher or lower level by a series of surges. A good deal like an incoming or outgoing tide with successive waves higher or lower than those preceding. The small buying and selling waves which occur during every stock market session run so many minutes. They are caused largely by the restlessness of active traders, active professional traders, much like the ripples produced by the wind upon the ocean. Trader must have activity. They make their livelihood by trading on fluctuation. Therefore, they engage in a ceaseless tug of war, trying to put price up whenever the condition of the market is favorable or drive them down when they find that the bulls are weak or have overextended themselves. The degree of success or failure attending their efforts enable us to determine whether the market is growing stronger or weaker. These small waves are part of large waves, which run several days and eventually make up movements of 3 to about 5 points. The 10 and 20 point moves are made up of 3 to 5 point waves, and the bull and bear markets are composed of many swings of 10 to 20 points or more. We can easily confirm the above by examining any chart. It is important that we do this as to impress upon our mind these numerous waves of various sizes. In as such as this will help us to understand the market, we will hereafter think in waves. When we are looking for an opportunity to buy, watch out for the down waves in the market and in our stock. After we have bought, we sit through a number of small, medium, and good sized waves until finally we observe that it is about flood tide in that stock. Then watch for an especially strong up wave and place an order to sell our stock at the market. The waves of the market furnish a clear insight into changes in supply and demand. By learning to judge all sizes of market waves, we will gradually learn to spot the time when a rising market or a rally and the time when a declining market or a reaction has altered and is about to reverse. These are the turning points. To be able to say when these turning points are occurring at the bottom of a bear market or at any important rallying point on the way down to the bottom or at the top of a bull market or at any important reactionary point on the way up is a mark of ability in an investor as well as trader. Remember, the market itself tells us everything we need to know about its probable future. Every significant change in supply or demand is registered on the tape. When we have learned to analyze the market by its own action, as recorded on the tape or on our chart, then we will be proficient. When we have learned to analyze the market by its own action, we record on the tape or on our chart. When we will be proficient in the art of operating in stocks. Of all the things that are most desirable to know about the stock market, these two are most important. Point 1. First, to be able to determine the final top of a bull market, and second, to determine the top of the intermediate swing, and finally to the top of the minor moves. Point 2. to be able to determine the final low in bear market, the bottom of the intermediate swings, and the end of the minor moves. Wyckoff stresses us to master this branch of subject thoroughly and says it is vital. But there is one more step, that is, our education will not be complete until we can cover all our shorts and go long at the bottom of a panic, a depression, or on an intermediate swing, and sell out all long stocks and go short at the top of a boom or an intermediate bull movement. This will be the result of practice, training, and experience. It requires great flexibility of mind and absolute control of our emotions. We can learn to do it if we study and faithfully practice this method.